Lately, it feels like every headline is trying to sell you a panic attack, tariffs, recessions, market swings. But here's what you won't hear. We may actually be in a really great housing market right now. So let's cut through the noise and talk about what's really happening. You've probably noticed the headlines lately. Words like tariffs, recession, and stock market volatility are being tossed around like confetti, except nobody's celebrating. And in the middle of it all, real estate quietly doing its thing while everyone else is yelling into the void. So let's slow down for a second and talk about what's actually happening. Not what the headlines want you to feel, but what the data is actually showing us. Because while the news cycle can sometimes feel like it's trying to sell us a panic button, the real estate market right now, well, it's more nuanced than that. There is calm in the chaos. Let's start here. Most homeowners, 83% of them, have mortgage rates under 6%. That's not just any number, that's a behavior. It tells us people are not rushing to list their homes unless they absolutely have to, because they know they're holding a golden ticket in the form of a historically low interest rate. At the same time, nearly 40% of homeowners own their homes free and clear. Another 29% are what we call equity rich. Translation? People have a lot of cushion. It's not 2008. This isn't the same movie playing on a different screen. So when you hear people say the crash is coming, ask yourself, based on what? Let's shift to inventory. We've hit Goldilocks inventory levels. Not too hot, not too cold. In the Dallas-Fort Worth area, we're starting to see some real movement here. Active listings are climbing, and not just a little. In fact, we have officially surpassed 2019 inventory levels. Now, if that makes your eyebrows rise, take a beat. Yes, it is a notable change, but it's also a logical one because what else has grown in DFW over the past 6 years? The population, dramatically. More people means more demand, and naturally, more housing supply follows. So while we are seeing more homes on the market, it's not an overcorrection, it's a rebalancing. Think of it less like a warning sign and more like the market stretching its legs after a few years of sprinting. And here's the upside: more inventory can lead to price moderation, more negotiation power for buyers, and a less frantic experience overall. That's good news for nearly everyone. What we're watching now is how much inventory continues to build and whether buyer demand, which is very sensitive to mortgage rates, keeps pace. But for now, the increase feels like part of the market maturing, not unraveling. Now let's talk about the word that has been tossed around lately like it's going out of style: tariffs. Will tariffs increase the cost of building materials? Probably. That's kind of the point of tariffs. But here's what's more relevant. Builders are already sitting on inventory. About 31% of homes for sale right now are new construction homes, and that number is growing. That's why builders are offering incentives. That's why now might actually be a good time to buy new before those costs get priced into future homes and before those incentives disappear. Another word we're hearing a lot right now: recession. And you're going to hear more chatter about a recession. You might already be hearing it from coworkers, clients, or even your neighbors. So surely that's going to tank the market, right? Well, let's have a quick history review. In the last 6 recessions, home prices went up in 4 of them. They went down significantly just once, 2008, and that was due to a very specific cocktail of bad lending, overbuilding, and financial engineering. That is not today's market. So while the word recession sounds scary, the data does not back up the idea that it's a disaster for housing. In fact, recessions tend to bring falling mortgage rates, and that's exactly what we're starting to see now: rates hovering in the mid sixes. Speaking of rates, if you have watched my videos for a while, you will know that I have been saying that when rates start to drop, buyers will start to come back into the market. Well, in the most recent data from the Mortgage Bankers Association that I have at the recording of this video, mortgage applications just surged. We're talking a 20% jump in one single week and a 24% increase compared to the same time last year. So let's pause on that for a second. This is the kind of movement that says a lot without shouting. It shows us in real time just how rate sensitive today's market is. The moment rates start to dip, even slightly, buyers and even refinances are starting up again. And this isn't just a blip. According to the Mortgage Bankers Association, this is the highest level of mortgage applications since September 2024. For purchase loans specifically, we are seeing the strongest pace since January of 24, which, if you remember, was when the year kind of kicked off with a bit of a cautious optimism before things got a little bumpy again. So what does this mean? Simply put, demand is not dead, it's just on standby. Buyers have not given up. They're watching, they're waiting. And the minute conditions shift in their favor, they move fast. This is why keeping perspective matters, because if you you are a buyer, this is your reminder that you're not the only one watching the market. And if you're a seller, it's a clue that the pool of serious buyers may be bigger than it looks, especially when interest rates flirt with the right number. So now that we have zoomed out and look at the national landscape, let's bring things closer to home because real estate is, at its core, local. Here in Dallas-Fort Worth, the numbers are telling a very specific story, one that isn't alarmist or euphoric, but somewhere in between measured and quietly shifting. Let's start with prices. The median sales price across our MLS is now $375,000, which is up just 0.5% from a year ago. So not exactly skyrocketing, but also not falling. Think of it more as the market catching its breath. But here's where things get really interesting, and that's on the inventory side. We now have 43,661 homes for sale, a 26.9% increase from this time last year. That is significant. And in March alone, 18,869 homes were newly listed, up 15.9% year over year. So if it's felt like there are more for sale signs around town lately, well, it's because there are. That said, pending sales are down 3.1%, with just over 10,700 homes under contract. And that softening in buyer activity is also showing up in a few other places. For one, homes are sitting longer. The median time on market now is 39 days, up from 29 days from last year. That extra week and a half gives buyers a bit more breathing room, but it also means sellers need to be more strategic. We're also seeing a slight dip in what buyers are willing to pay. The price per square foot has dropped 1.1% to $188. And homes are now selling for 96.5% of their original list price, down from 97.3% a year ago. It's a subtle shift, but it points to buyers having a little more leverage and a little less urgency. And finally, closed sales in March came in at 9,615 homes, which is a 2.9% decrease from the same month last year. All this adds up to 4.6 months of inventory sitting on the market right now. That's up nearly 28%. And importantly, it brings us into what's considered a balanced market, between 4 to 6 months of supply. That's what we call balanced. So what does this mean for you? If you're a buyer, this might be one of the more favorable markets we've seen in years. More choices, more time, and less pressure. If you're a seller, it's still a good market, just one where pricing, presentation, and patience matter more than ever. The frenzy is gone, but the fundamentals, they are still strong. So what's the takeaway? You don't need to predict the future to feel confident in the market. You just need to zoom out, look at the long-term patterns, understand the difference between fear-based headlines and fact-based decisions. If you're a buyer, know your numbers, understand your financing options, and recognize that opportunities often come when others are nervous. If you're a seller, understand where your home sits in today's pricing environment and be open to a thoughtful marketing strategy that meets buyers where they are. And if you're just watching from the sidelines, that's okay too. But don't let headlines do all the talking for you. Get curious, ask better questions, and you'll get better answers. The market doesn't need hype right now. It needs clarity. It needs people who are willing to ask what's really happening and then do the work to find out, or just subscribe to this channel. Because calm isn't the absence of noise. It's choosing not to let the noise drive the story. And there you have it. That's your April real estate market update. If you found this video helpful, be sure to check out another video on this channel. And if we have not met yet, I'm Jennifer Templeton. I'm a realtor and broker associate with the Crest Edge Group at Keller Williams Rockwall. Our group works with buyers and sellers all across the Dallas-Fort Worth Metroplex. And if you're thinking about making a move in 2025, we'd love to be your real estate resource of choice and earn your business. You can call or text me at 214-803-4444 or send me an email to jennifer@thecrestedgegroup.com to get started. Thanks for watching this video, and I'll see you in the next one. Bye now.